Hey guys, how's it going? Welcome to the London session recap for the 1st of July 2022. So very quickly on the higher timeframes, as hopefully we should be pretty comfortable with this for now. Complex structure is a little bit complex at the moment. From a swing structure perspective, it's very clear. We are bearish. We've had a lower low, pull back to premium supply, and ultimately we are expecting that weak daily swing low to go. However, we also have this pretty significant internal structure that shifted bullish. We've come into that strong internal low, so there's a decent chance, right, we could potentially continue that overall internal trend to take out the weak high. But ultimately, swing structure is more important. A lot of the momentum to the downside, pull back up, and another lot of momentum again. We've had a bit of a reaction off that internal low, but it was quite corrective, pulled into a nice area of 4-hour supply, and then was sold off with a bit more of momentum. So it kind of feels like, based on looking at the nature of price action in terms of impulsive versus corrective, that we're just building liquidity to want to kind of take out these lows, right? So I feel like I can make a good argument for either way, whether this could break out and take out that internal weak structure and continue that movement, or whether swing structure is going to continue with just chopping around for a bit before we actually dump out and take those lows. So kind of open to trading both ways, as we always should be, right? We don't want to get too attached to one bias. But yeah, structure is a little bit complex because if we look at the 4-hour chart, I personally have it mapped as bullish, as I viewed that as a significant swing pullback. We then shifted bullish, so this would be our current bullish 4-hour range. However, as I've been saying, for a while now, I'm also very wary of the fact that this could just be that one push down, right? This isn't really that much of a swing pullback. This is the true swing pullback on the 4H, and now we're ready to take out that as the weak low. So I'm kind of, I can see both arguments here in both styles, and that's why I'm happy to look for longs from within here in case this does become the move that then continues to take out that weak high, the weak 4-hour swing high, and potentially the weak daily internal high. But like I said, I'm also viewing it, happy to view it both ways, that this could just be a short-term bounce, potentially back up into one of these supplies to then continue the overall movement. So kind of just open to trading in both directions, really. I'm just seeing which way what price wants to go. And ultimately, because I typically trade with a 2 or 3 pip stop loss, and 10R is really my main target. Anywhere between 5 and 10R, I'm pretty happy. I only need to catch anywhere from 10 to 20 pips, really. So I'm not trying to swing and necessarily care too much where we go. As long as I can get opportunities within here, to target the overall direction, I can get the majority of my volume banked. But let's keep things nice and simple. Let's say this is our 4-hour strong swing low. We've come into an extreme level of 4-hour demand. We've then had our change of character, right, giving us a nice bit of fractal alignment there, giving us essentially a 4-hour confirmation entry of the 4-hour extreme zone, right? So now we have another level of demand to work with to continue and potentially target these highs, but we have to be aware of these levels of supply in the way. So in order to come back to our level where we're looking to trade for London this morning, price had rejected this 4-hour supply range, but there's every possibility, right, we can get up at least to potentially maybe to this refined pivot supply. So I'm more than happy to essentially look for longs from within here. But also, like I said, if you're looking for shorts, there's still a bit more confluence to it than there normally would be trading short into a 4-hour strong low, if you kind of view the overall larger structure as being to the downside there, right? Okay, cool. So that's the 4-hour and the daily. Let's take a look at the M15. So the M15 is a little bit more simpler in this case, because I think everyone should pretty much have the M15 as now bullish. We've broken structures to the upside, so now we can look to play that swing pullback down into these levels of discounted demand, nested within the 4-hour demand, to try and catch that M15 higher low, to then target that higher high, potentially up into that level of 4-hour supply. Very, very simple. The only thing I'll kind of remind us of is that, although, or at least the way I define swing structure, for there to be a trend change, I only need to see one break of structure. So we're obviously bearish with the swing lower low, swing lower high, swing lower low, and then we get that swing higher high, we get that swing break of structure to the upside. For me personally, I now view that as a trend change, a swing trend change, and the M15 is now bullish. But I'm aware that one break of structure is not always the most convincing signal that we're now going to go and see a sustained trend, right? Because what can often happen is that you get the M15 switching bullish, it changes trend just to mitigate some 4-hour supply before then continuing the overall move. So that's why a lot of people, or a lot of traders I should say, for them to have a true confirmed trend change, they need to see both a higher high and a higher low. And remember, a higher low is not confirmed until what? We don't know where this higher low will be until we get that next break of structure, because it's only once we get that second break of structure that we know where the higher low is. So in other words, a lot of traders only confirm a true trend change when there has been 2 breaks of structure. Okay. So the point I'm trying to make here is I keep my trading very simple. After one boss in the opposite direction, that for me is a confirmed trend change. I now view the M15 as bullish, but I'm always aware in the back of my mind that if it's only one break of structure, it's not the strongest of signals and we could easily switch bearish. So if you view the 4H, in this way, where you view it as bearish, we pull back and now we're coming down, then you could say potentially we only switch bullish on the M15 just to mitigate this supply range to continue to the downside, right? There is that small possibility. So I don't necessarily think that's going to happen, but it's just something you can have aware in the back of your mind that then may give you a little bit more confidence or confluence to want to look for shorts within here, right? To continue to play that M15 swing pullback with the small potential that this may end up being the move that continues to the downside, right? In line kind of with that overall larger 4-hour structure. But again, maybe I'm overcomplicating things. We don't need to dive that too deep into it, right? We came into a strong level of 4-hour demand that led to that 4-hour bullish change of character, giving us a new level of 4-hour demand where we can then look to catch that higher low to continue to target that weak high. We then have the M15 swing structure realigned with the 4-hour structure. So now we can look for those pro trend M15 higher lows to continue to upside. That's really as simple as you need to keep it, right? You don't need to get as complicated as I'm trying to make it. Now, when we opened up, Frankfurt was around here, right? It was just sort of pre-Frankfurt. We had mitigated this level of M15 supply. It's not the best, right? We can see it flipped this level of supply here, but again, this isn't really that clean. It's all quite messy. Had a bit of a reaction and we pushed up. Didn't sweep any liquidity. Arguably this is inducement, but it's not the best. It's not well priced. Obviously the EQ's below here. There's plenty of nice unmitigated POIs below. So typically, what do these POIs do? They just provide a short-term reaction to facilitate a pullback into supply and generate liquidity for price to then continue that movement, right? Excuse me. So as we can see, looking at the internal structure, we had just pulled back up into essentially the EQ of that leg, where we had this unmitigated supply level here. And you can essentially follow this bearish internal structure deeper into the discount. Obviously, the lower you go, the lower probability it's becoming, but at least at this point, it was still quite high up in the leg, quite high up in the premium, and you're shorting basically bang on session open, right? So you can kind of get away with a quick move, targeting that low. Now remember, it's only once you get the internal structure realigned with the swing structure, when we get that bullish IBOS, that then confirms the swing pullback may be over, and then we expect those bullish internal ranges to hold until what? Until it completes its objective and takes out that high. Okay, so that becomes useful, very, very useful information. So there was quite an aggressive short from within here. The 2 POIs I was kind of aware of was this one here and then this one up here. So as we kind of came into that, and then obviously, losing the lower timeframes to confirm that it wants to hold, which we can see here, right? Nice inducement into that extreme level. Quite a random POI, doesn't have a lot going for it, but it's an unmitigated M15 POI, session timing, and then when you see this sort of price action happen, boom, like big volume stepping in, right? Clearly an overwhelming imbalance between supply and demand there. Not only do you just get a chock, right? Because imagine the price kind of trickles in, and then it gives you a little chock here, or maybe more accurately, you kind of get a bit more of a M1 swing, and then it kind of gives you this little chock, right? And then you're getting short here. That is very, very different to compared to this, because you keep getting short, it can come in, kind of just mitigate the demand on this low, right? The bigger swings, and then just do that, and then just smash you out. And you're kind of just shorting just a little chock from a kind of random M15 POI against the M15 and 4-hour swing trend, and it's not so great. But with this, it's very different, because not only do you get the chock here, where we take that fractal low, but we clearly smash through and break a bit more of significant structure on the M1. Right, so it would be ideal if we had nice clear equal highs here, but nonetheless there's still a high here. Essentially you get these equal highs. Liquidation, mitigation. This is the textbook definition of a V-shaped reaction. Chock, clearly make demand fail as well, right? Essentially that's your IBOS on the M1, and then this is the level I marked out. I put my RR tool on TradingView, but I was just hesitant. I was like, am I forcing a bit here? It's a bit of a random M15 POI. It's just kind of halfway in the leg. It's all quite corrective. I'm trading against the swing trend. Maybe I'm just going to chill and just wait for kind of the pro trend move. So that's why I ended up hesitating, and then it just melted beautifully, which is a bit frustrating, but it is what it is. So then we continue to have another internal break of structure. Okay, so at this point now, what do we have? We have this as our protected or strong internal high, whatever you want to call it. So strong here, right? So now we can continue, like I said, continue to just follow those internal ranges. So as we come down, as price pulls back up, you can continue to look to short and push down and towards these discounted levels. But obviously, I'd recommend being aggressive and taking profits at those weak lows if you look to get involved. So initially, we failed to break below it, and then we pulled back up and we mitigated this level of supply. So that could have been a potential level to look for shorts. I don't believe anything's set up in the M1. Yeah, we kind of just pulled back up very, very aggressively into that level. Didn't mitigate any refined M1 supply, and then just pretty much melted off again. I think someone was looking at an entry from within it. Let's have a look. So obviously you get your bearish M1 shock here. But yeah, there's no flip here for me. So obviously for a flip from this level, we would have needed to see price be contained by this demand zone, but price pushes straight through. Okay, so that's not flipping this level. You have this refined here, but doesn't really flip that. Okay, so what you could argue is you are essentially flipping this unmitigated pivot range here, those two candles. So price pulls back up and then it pushes down. But what do we need for a flip? We need a candle closure below the reaction line, or at least if you use my rules, some people use a spike. So if you use a candle wick, then yes, at that point that would be a flip. But for me, I need to see a candle closure below the reaction point, which doesn't happen until here. And then this for me would be my whole flip range, which as you can see, price just melts off at that point. So there would have been no entry. However, yes, if you use a wick, well, let's see, price would have come down and wicked it, then yeah, as it then comes back in, you could then enter within this range, right? Because that would be your reaction failing. Price then comes back in, you can enter with anywhere within here, right? And that could be an entry. So that would be a valid flip only if you use wick breaks for your failed reactions. For me, I need to see a candle body closure, so that would not be valid in this case. And yeah, there's not really too much else to add. It's not really an entry I'd be looking at personally. It's all just a little bit messy. I'd prefer to see really a candle closure, even if you're just viewing it as a structure zone. Then you've got that clear movement below. Then you can come into here and then look for that short targeting this low. So not really one for me, but I can see some logic behind that, especially if you do use wick breaks. So then obviously coming in into the first sort of real level of discounted M15 demand within the 4-hour demand. I wasn't initially in love with this POI because there's no inducement really in the leg, didn't sweep any liquidity. However, it did flip this zone and it led to a lot of momentum. So we can see that there definitely was a lot of demand within here previously, signaling that potentially there may be again. So I was happy to look for longs from within here, but as you can see, we sold off very, very aggressively on the M1 coming into there. Lot of momentum, just about tapped into it and then gave the chalk. So there is an entry there, like the bare minimum, if you just basically just use a chalk for your entry. As price comes in, takes the low, takes the high. So then at this point, anywhere from the high to the low is essentially your M1 demand range. Price then taps into it, fills those orders, and then flies off. So yeah, so it's about as aggressive as my entry model could ever be. And typically I'm going to reserve being that aggressive for extremely high probability POIs, right? In this case, there was a lot of momentum, no real clear M1 liquidity sweep. You're trading against the M15 internal structure. Maybe you want to wait for a bit more confidence. At least I would in that instance, right? So yeah, it was a little bit too aggressive for me, and it just flew off anyway. And you would have needed about 4 or 5 pip stop anyway to get in that trade. So that's not a missed setup for me. That does not meet my plan. So then what I was considering is essentially just looking for potentially to follow, being a bit more aggressive at this point, but just following the bearish order flow on the M15. So basically just looking for price to come into this unmitigated level of supply and then look for kind of another push down. I would have basically taken all of my profits at that low because we have now done what? We have mitigated, zoom out a little bit, M15 demand in the discount, which basically does what? It increases the probability that the high low is now forming because we've pulled back to an area of value. So shorting becomes much lower probability when that has happened. Obviously, it can still play out. That's why I was happy to get involved in case you can get a quick 5 or 10R to that low. But it's much lower probability compared to this one because at this point, we had not pulled back to the EQ yet, right? So there's still that possibility to short down into value. But once we pull back down into value, now shorts become a lot lower probability as there's an increased probability we're now ready to take out that weak swing high. Like I was saying, that isn't confirmed that the swing pullback is over until we get that bullish IBOS. And that's when it's much higher probability to then look for that movement, okay? Cool. So then as we're coming towards the end of the session, I basically just had this extreme marked on because I viewed that as the the high of this last unmitigated POI, because this one here I viewed that as already mitigated and or had already caused the move. So how my alerts set here, I'm literally just chilling. I'm not going to buy from this. This is a weak low as prices come back down from supply. That's not an entry for me at all. So I was looking for an M1CE from here, confirmation entry. You see that's bang on 10 a.m. BST, very end of the London session, and price smashed up straight through. So there was no entry for me. Arguably though, what you could have done is once you see price go, and if you're still happy to trade past that time, is this is a strong internal high, right? This is still showing the M15. Right, that's still that leg there. So yes, although we'd had a tap into the distal, there can still be orders from within the EQ, and potentially you could have looked for some shorts from within there, after session. But yeah, it's just not that high probability for me. One, the session's over. Two, we've mitigated discount demand. There's just no real need to kind of be forcing at this point. But yeah, there was potentially an aggressive chalk entry there, essentially sweeping all of these highs, and then you could have looked for that CE there. So yeah, it'd be interesting to see if that continues to push down or not and take out these lows and push deeper down. But yeah, not super high probability really at that point. So yeah, I hope you guys took some value from that. A bit frustrating that I lined up the trade on Frankfurt Open, but it is what it is. It's not the most amazing setup in the world in terms of the M15. But yeah, I do like those kind of, when price comes into a POI, you have logic behind why we're going to sell off and push down deeper, and then you get that momentum kicking in. Yeah, thinking out loud, it probably is the sort of trade I should not be too hesitant on, as it's kind of worth the risk. So in terms of analysis for New York, I'm going to try and keep it simple. I think you guys are aware that, I think there is that possibility of the bigger bearish picture, but still viewing the 4 hours bullish. We've come into an extreme level of demand, giving us that bullish chalk, pulled into demand. So at least expect a movement into here. Potentially, if you can see like this small internal structure staying bullish, then we can potentially, expect that high to go. But if you start to see it come into, say, this level of supply, and then you get that small IBOS or even chalk to the downside, then we'd expect that movement to go, right? So yeah, it'll be interesting to see if this can hold or not, and continue that move. On the M15, swing trend's obviously bullish. We've pulled back into a level of demand. So let's see now if we can get that bullish IBOS and break and close above this high, because then if we do, we'd expect that internal structure to hold at least until it takes out that weak swing high. Otherwise, we may roll over to the London low into New York, and then we can look for longs from these unmitigated levels, right? And obviously it depends on how much confidence you want. If you're happy to get involved in the M1 straight away, or if you want to wait for an M15 chalk, or if you want even more confidence and you want to see that IBOS, that is up to you. Personally, I'd be happy to take an M1 entry from within here. But obviously, if it starts dumping really, really aggressively, you may want to wait for a little bit more confidence, right? Whether that's an M15 chalk, or maybe at least on the M1, you want to see, a much clearer M1 entry model, clear sweep, clear flip and interaction, or maybe you want to see, that first level of respect hold, right? That first M1 demand zone hold, and then essentially then look for the double confirmation entry, right? They're all the sorts of things you want to be thinking about, depending on how it all sets up. Or you can keep things super simple, like we advise in the beginner trade plan. Pro M15 from a well-priced M15 zone. As soon as price gets within the M15 refined pivot POI, just hit the M1 entry model as soon as it sets up, because over a large sample size of trades, I can pretty much guarantee you will be profitable, obviously with correct risk management and all that fun stuff. So yeah, it looks like this might be playing out and continue to the downside. So yeah, we'll see how that plays out for New York towards the end of the week. So with that said, I hope you guys have a good end to the week and a cracking weekend, and I'll see you next one. Cheers, guys.